Good morning. Let's start off looking at the weekly chart in the euro dollar, which is looking a lot. I can do more with this one than the daily, which is like driving me insane. But with the euro, you can see here, I mean, we have just gone, since July, we've just gone sideways in this consolidation. Now, the important point to note is the fact that this 70% fib level, right, wasn't breached on a closed basis. It just wasn't. We spiked up on the day, got away with it ourselves, and we could not break higher. Now, the 70% fib level is at 117.77. Sorry, 119.77. We got to highs of over 120 just. So we were like 30 pips, 40 pips over that 70% level. Obviously, as you know, the algorithm systems are programmed to do this sort of thing, stop you all out. That's what they do. Now, with this pattern that's unfolding on the weekly charts, here you have the initial move where it stops 38.2 as you should. Then it comes down and makes this little continuation pattern. Off we go again. Now, what's happening now in the weeklies is you're seeing consecutive highs and consecutive lows. So higher highs, higher lows is normally a bearish pattern for that particular market. Now, if you look, and we can do that, we can draw on a segment. If you look, you can see that last week broke that area, okay? So only last week did we do it, but we closed higher. Now this morning we're 118.35, so we're not making a lot of headroom on the top side. So what we'll do now, you see this pattern, this is a weekly chart that's bearish. You can see that the 9-day and the adapted 9-day moving average is coming in together at 1810 to 1805. So that's the area we're going to be looking at. So now let's look at what's happening on the daily chart. So here's where you see the daily chart, and you can see where you are making consecutive higher highs, higher lows. The break last week, you can see that really clearly, but within this sideways pattern. Now, sideways or a topping pattern, we know that the long term, as you could see, which I've just showed you, the long term one shows this, that we are, as you can see, in a downtrend. We've been like this since 2014. Down we come, we go sideways, up we go. We can't break above that 125. Down we come. We don't take out the previous low, no matter what anybody tells you. We didn't take it out at 103.40. Okay, we based here and up we've gone again. But the thing to notice in the longer term charts is the highs are failing to actually break, and all the while they fail to break, there is potential for the market to slide back lower. So you can see there the weekly chart going back to 2014. So now we'll go back to the daily. So here we're seeing that end a little bit. So keeping the fact that the trend overall is lower, okay, understand that. This little sweetheart that we've seen here, from here, has only been a correctionary move to the major trend and hasn't broken any significant levels on the top side. So we could, in actual fact, be seeing a head and shoulder top. There's your shoulder, there's your head, there's your other shoulder. So the two levels we're going to be looking at, well, it's 4 levels that we're going to be looking at, but on the top side, the level that we're going to be looking at is, first of all, you have the monthly pivot that is coming in at 118.65. You have the weekly pivot, which is coming in at 118.25, and the daily pivot coming in at 118.45. So it's all there. You've got support down to 118, the figure. You've then got it down to the 55-day moving average, which is coming in at 17.24. Obviously, you've then got underneath that the 38.2 fib coming in at 16.92. Okay, so 92 to 90. There you are. There it is. Okay, the measured target from this pattern, if it was to come to fruition, is 114.65. Now what you do is, it's very, very simple. You take of the pattern, you take the higher level and the lower level, and you detract the lower level from the higher level. Now this gives you 274 points. Now what you do is you find the neckline or the lowest point of that congestion area, which I've got in as 1737, and you detract 274 from 1737. So what have we got down around that 1463 area if we break? Well, we've got 114.90 coming in at the 61.8 fib level, and underneath here, lo and behold, we have a support line coming in at 14.56. So there are reasons technically, and there are reasons, I say fundamentally loosely, but there are reasons why the euro shouldn't break up through the 120 area. I think there was mixed signals from the ECB saying they were quite happy with the euro up at 118. Are they happy with the euro up at 125? I wouldn't have thought so. However, this can take a while. Now, how you know that the differential between a topping pattern and a sideways continuation pattern is that a topping pattern takes longer to form. So this has been going on since July. We're nearly at the end of September. So in our terms, it's taking quite a while. You can see on the weekly chart, it's not quite taking so long, and you still have that same pattern. You do not have this head and shoulder on the weekly. You have a pole, consecutive higher highs, consecutive lower higher lows, and that is the key. That does not, on the weekly, make you want to rush out and buy the euro. Obviously, if we break 119.20, happy days, then we do. But at the moment, I think there's more pressure on the downside, and I think we should play that accordingly. Good luck. I will catch you all later.